Hey all, welcome to ShareTreck. This is Raj here. Friends, I have been talking to you about these valuations being very stretched in the market, and there is a point of time where the stretched out elastic might snap. Maybe we are fast approaching that spot because Dove had a series of almost 20 days of red candles coming downwards. And yesterday we saw the stock market drop for all the indices. So what is the writing on the wall? So today I'm going to take the US dollar index and give you my thoughts on what the US dollar index is telling me and how we are proceeding. This is part of a series of videos that I have made on the macros and fundamentals, which includes bonds, what the bonds are saying, and so on. If you haven't seen them, check out on our channel. In the last 1 week, you would find a few of those videos, and let me have your feedback. That said, let's get started. Welcome back, friends. Here we are in the TradingView platform. I'm looking at the US dollar index, and each of these candles is a one-day candle. So what you're seeing here is a technical situation where we have got the RSI crossing over the overbought area. In the past, it has gone slightly above that, but it's very close to where it had snapped before when it comes to the RSI. And if you look at the MACD is bullish, indicating further upward movement. How much more can it go? So we have an all-time high here on this chart, where if I count the spikes, I think we have gone all the way up to 114.87. And right now we are at 108. So there is another 6 points of move upwards that can happen. $6 more upwards, and that's going to be very painful. And there's a reason why. As the USD becomes stronger and stronger, what happens is that there are other countries from where supply chains operate, from where demand originates for US products. So it's a plus and minus that is weighing off each other. That is the first factor. And when US dollar becomes so strong, exports into US becomes cheaper, and it defeats everything that Trump was looking forward to in terms of making US self-sufficient, because whatever tariffs he raises is going to be compensated by the strengthening of the dollar and therefore the weakening of the foreign currency. So people inside US may end up paying an indirect tax for the tariff, and at the same time the foreign companies are not going to suffer because their currency has been devalued, and they will still get the same amount of yuan or euro or whatever they have within their own countries. So that's the first point we have to keep in mind. So the further up the US dollar index goes, it makes US products expensive to export and therefore dampens their consumption internationally, increases the trade deficit, and it makes the imports cheaper because other currencies are much cheaper than the US dollar. So US dollar can buy more when it buys from outside. So imports will go up and exports will go down, which increases the deficit, which will be inflationary in nature. So having said that, look at the other angle. Let us say you are an international investor and let us say you're based in Hong Kong or Japan or somewhere, and you have invested a good portion of your money in the US stock market chasing higher returns. And now you're looking at US dollar at 108, and you're thinking, okay, I've got another $6 to $8 to go up on US dollars. I'm not leaving that on the table, so I'm going to wait for it. So you wait, and somewhere around 112 or 113, you decide to pull the plug and you take the money out. When you take the money out, you're not only selling the treasury or the stock that you own, but you're actually converting the US dollar into a foreign currency or into gold or into crypto or something else and stashing it away. So if you think that euro is going to be much better, or sterling or Australian dollar or Canadian dollar is going to be much better, then you'll move the money out there because you get more of that dollars or the sterling, and you feel that the future of those countries is much better and their financial and economic status is much better. Or maybe you decide you just want to go for gold or platinum or palladium or something like that. So when that happens, what would happen is that the demand for dollar will go down because people will be selling the dollars to buy foreign currency. So the foreign currencies will start stabilizing and moving upwards. This is a normal cycle of economics. There is no politics involved in this. It's just the way things work out. So if that starts happening, then you will find that the US dollar index is coming down, money is going out of the US, and therefore money is getting out of the treasuries and out of the stock market, and that's when the yields will start to go up because the treasuries are not much in demand, and therefore the price of the treasuries will fall. When the price of the treasuries fall, the yields go up, and when the yields go up, it means that you're paying a higher interest. So that's the way I would look at it. So typically after reaching 114, I think we'll see a turnaround. Probably this time around the stock market might turn south, somewhere around 112 on the USD. That's my personal opinion, not financial advice. But if you look at the entire economy, this is just one slice of what determines what happens to the market. But this is the way I'm looking at this slice of information. Now I'd like to hear from you guys what you think about this. We are right now at 108, and we have the ability to go all the way to somewhere around 114 or 114.5 or something in that level. So that's what I think the US dollar index tells me. And right now, if you look at what's happening internationally, euro is a bit weak because there is political problems in both France and Germany, which are the engines of euro. But if Germany decided to switch on their nuclear reactors, and if they decided to put border controls in place, and if they decided to focus on an economy first kind of a principle rather than other ideological pursuits, then I think Germany can turn Europe around, and those policies will gel well with other countries as well, because each country in the euro might have some border security, which is the direction in which I think euro is proceeding. I think it's the right move in the right direction, and that could help euro become stronger. As far as Britain is concerned, I think the new configuration of Germany and France, once the new governments come in place, might be more in tune with free trade with Europe for UK, so that will help UK also. So those countries might find some respite out there. I don't know the situation in China, but the Chinese government is trying its best to boost the economy, so there is a loose money policy out there. And I think there are other emerging economies like India, for example, which do not have too much of export-import connection, and they have a big market within their borders and a lot of indigenous companies producing and expanding the economy. So they will do pretty well overall. So I'm thinking that it's just a matter of time. We have to see how USDX goes to 112 or 114. And remember, all the things that Elon Musk and Doge wants to do is going to be very difficult to pull off. And with this huge deficit, any further tax cuts is going to be difficult. And cutting Social Security and Medicare is going to be next to impossible because it's going to be highly unpopular. So Trump has promised a lot, Elon Musk has promised a lot, and people are expecting a lot from these guys. And when they come into the office, let us say somewhere around January, if we get the employment figures and it is revised downwards, then I think that's a perfect storm for the market to fall down. So either way I look at it, I think 15 to 20 days at the most, we are going to have an opportunity to take our money and get out. That's the way I'm looking at it. I'm already out 60% in cash. These are all my personal opinions and not financial advice, so please don't blame me if you sell everything and the market still continues to go up. Nobody can predict the future of the market, but I'm looking at various silvers. If you haven't seen my bond related video, check it out, what bond says about the market. And then here we have the US dollar index, which I spoke about. I'd like to have your feedback, friends. We are a retail investment channel, and all of us need to share our intelligence and information in the community comment section so that we all benefit. So please start engaging and interacting. With that, my friends, I'd like to bring this video to an end. Thanks and have a great day. Bye for now.